Exactly as predicted, my friends. Exactly as the TA showed. Welcome to Market Makers. Let's get into this. All right, guys, it's Brendan from Market Makers. Thanks for joining me for this urgent market update. Guys, this video is going to be brought to you by Simple FX. If you want to trade these markets, my friends, Simple FX is a pure futures platform, decentralized. They cannot trade against you. The best bonus in the business, up to $5,000 instantly based on your deposit. You need a VPN. Check out the video description. Check out the pinned YouTube comments, guys. You get a free month in our room if you try out Simple FX. Message Lee in the Telegram. If you want to buy spot, if you want to trade some of these exotic altcoins, we have that Bing X option as well in the video description. You get a free month on our Discord with them as well. Let's jump into this, guys. Exactly as the pattern predicted, guys. This is the Sigma TA you need to succeed. Guys, I want you to trade these markets with me in this descending market. This is going to be a year to build your financial freedom. We're talking about life-changing money. If you watch my last video, let's go ahead and dive into this, guys. The next video is going to be on Sunday or Sunday kickoff show. I'm going to combine the markets again because they're moving so in unison. You guys have to watch what these are doing. Starting off with the ES Mini, okay? The ES1, I should say, the E-Mini futures for the S&P. 9 bars, 63 days. 16 bars, 112 days. The exact same patterns. It's .com on my left, modern market on my right. Came back and back tested the trend line like we talked about last video, guys. And here we're back testing our trend line. We're going to look at this in the smaller time frame. And you can see the different phases of the market. My take on Dow theory. I'm going to explain this on another chart here. So let's go ahead and walk through this. Phase 1, denial, minus 30%, FOMO, minus 40%, disgust, minus 50. On the modern markets, we got to denial, minus 27. The next level is FOMO, minus 34%. I have that target of 3150 to basically 3400. I'm going to show you on the other chart, and then disgust again, the bubble target of 50%. Guys, it's the exact same movements. It's the exact same candlestick pattern. You're only getting it on this channel. I'm starting to see other channels talk about some type of pivot that's going to come in the next 30 days. I've been making these videos on the spring equinox since last year, and I remade the video again about a month ago on the S&P specifically, guys. Here we are on the daily chart. This is why we shorted up here, my friends. If you guys are watching this channel, I am sharing trades with you. You need to watch the channel. We shorted up here at 4180. Look at this decline in the market and look exactly what we're hitting here on the daily time frame. The 200, bouncing off the 200. So we need to do some TA on this, see if this is going to hold up. Here's your trend line, slightly different. This is going to vary depending what chart you use within $20. Essentially, we're back testing long-term support here. Once we flipped it from resistance to support, it's your 200, right? It's a lagging indicator, but it's algorithmic buying. 43% of the indices are bought based on algorithms. Let's get a descent measurement here from our trade to where we are now. 6%, guys. 250 handles on this trade. Fantastic trade. Zooming out here, you can see my 43-day pivots that have been hitting like crazy. 43 days, bottom, top, to another top, to this declination in price. March 20th is the spring equinox. Inflation came out today, PCE, and this came in hotter than everybody expected. The market is now pricing in a 37% chance of a 50 basis point hike. And when is the Fed meeting? Here's the spring equinox, March 20th. They're meeting the 21st and 22nd. Again, you cannot make this up, guys. Remember, in .com, the spring equinox provided our top over here. This was our top, and then we sold off hard. So we're going to look at this here on this current time frame, because if we can hold this base and move back up, let me show you the exact movement I think we're going to do, because this is based on market history and the bubble pop pattern that we have, the boom bust bubble as I'm calling it. We're going to come back up. Could be a co-equal high like in .com or a lower high just like in the GFC. And here's your spring equinox. This could be your top or it could be afterwards, okay? And then you're going to come back down. And guys, this is going to be the massive sell-off up in this area where I'm going to share where I am trading. This can be a massive, massive trade, okay? Let me go ahead and look at this with you here. Let's do a couple of things first. Let's check out the volume. All right. I'm amped. I'm so pumped about this marketplace. Guys, I mean, I've been through this in 08 when I was working at an investment bank. I've been through this in .com when I was trading energy. So this is like the best market you could possibly want as a trader. There's so many opportunities to make money in this marketplace. So looking at the volume, this is good. We have below average volume. Now it's still early. It's only, what time is it here? It is about noon Eastern time, but you have below average volume. This is good. This means this decline was not a strong move. You want it to hold this region, okay? Because we want this bounce back up. Let's just assume, let me take the volume off. This is the base here, right? We don't descend lower because we want to look at retracements of where this could pop up to. Remember, I'm going to use the impulse move here, not the extreme to extreme. I'm looking at the 486, 618, 786 as your three likely upside targets. 40.55, 40.86, 41.25. That's assuming you don't come up for a co-equal high or get super bullish and break out to the upside, but we already have that target. That's that 4,300 target, okay? So what could happen here? Today's Friday. Next week, we could see some basing action, some volatility. What you want to look for is to see if price is going to climb to one of these three targets by the spring equinox. And again, the CPI is going to be a driver on March 14th. If it comes in fractionally lower, expect retail to push this up, okay? If it comes in at the same level, I don't know what to expect. It could just peter out, could just see volatility and chop, but basically we're looking for a trigger level with the Fed coming out on the 22nd announcing their rate hike, and we're getting close to that 50% level where it could be a 50 basis point hike, which again, guys, market has not priced in. Hasn't priced in, that would be a trigger for a sell-off. Now, if we did start losing this bottom, if we got some big volume bars on the down move, this would be reminiscent of the GFC, where we find some base down here, come back up, and almost guaranteed just to make a lower high, this type of move and descent. So you guys need to stay tuned to this channel. The next video is Sunday, because I'll keep updating you on this. But these are the key retracement levels to watch. I really like this 786 at 41.25. Let's see what the MFI and everything's doing here. MFI is bearish, volume is down. This is all good because we want this level to hold. Let's go ahead and look at this on the 3-day chart. People were asking me to explain my, my take on Dow theory. Dow has three phases to the bull market. The market moves in threes, guys. Dow's been talking about that. Dow talked about this over 100 years ago. Gann wrote heavily about this. But the market moves in threes. Three phases to the bull, three phases to the bear. This is my boom, bust, bubble cycle. And this is the three phases of the bust side, okay? Denial, FOMO, disgust. Now, denial, what does that mean? People want an explanation? This is when you watch CNBC and Bloomberg, you watch these professional money managers, and what do they keep saying? Oh, this is a stock picker's market, Bob. You gotta really focus on companies that have value and that have a strong cash flow. This is retail buying Peloton, buying Coinbase, pushing up the price of Bitcoin, guys. This is what the denial phase is. It's not a bear market. This is Tom Lee telling you you're going to 4,800. This is the crypto YouTubers. This is talking about, oh, we're pumping the 50K. This is the same people that were predicting 250, 500K for 2022 are back out there calling the bottom. This is all part of denial, and it's so beautiful to see it play out the way that it has. The FOMO phase, minus 35%. This is the big banks, guys. This is Morgan Stanley. Mike Wilson won Strategist of the Year last year. He says we're going to 3,000. Notice my target here of 31.41. This is Marko Kolanovic, Hall of Famer for JP Morgan, Chief Strategist. going to the low 3,000s. Mohammed from Citibank, Savita from Bank of America Merrill Lynch, all say low 3,000s. This rally, when we do come down after the spring equinox, we come back down to this level. This is the rally to buy, and I will share that with you when we hit this level. Again, this level can be this 3140 target all the way up to that 3400 level, because this, based on market history, will be a 20 to 25% up move, okay? If this rally fails, you will come down to the discussed level, which is the bubble target for every single bubble going back since 1972-73, okay? 50%. Your dot-com, your great financial crisis, and potentially this bubble as well. It all hinges on the FOMO phase if you can hold the lows as the market, as the economy continues to deteriorate. I personally do not think you'll be holding the lows, but I am definitely trading this rally, and if we top out, I will be shorting this rally and sharing that with you as well. Let's go ahead. Let me show you how I got these projections. I've showed you guys this before for the long time subs, but I know we get new people all the time. Trend-based fib from the all-time high, guys, down to our first impulse. The first move to defeat the bear market is this move here. Look how this lines up. Your 618, 3593, boom, hit it. 1 fib, 3141, 1618, phi, the golden ratio, 2409. And again, we do have that lower target in the mid-1800s if you lose the discussed phase, which would be absolutely catastrophic. And guys, I wanted to show you this white line down at the bottom, 1578. This is the all-time high of the S&P from when? The great financial crisis, which is only $12 higher than the all-time high from the dot-com bubble. Just understand that if you come down to 50%, which is the same bubble target you've hit twice in the last 20 years, you are only 34%, Fibonacci number, only 34% above the all-time high, essentially from the dot-com bubble. That is 20 years. Now remember, the S&P typically returns 10% a year. That would be averaging what? And 1.5% a year, a little bit more than 1.5% a year. That is exactly why you see the statistics. 94% of professional money managers cannot beat the S&P over a 20-year period. Proof is in the pudding, because if this comes down, all those people you watch on Bloomberg, CNBC, the halftime show's the worst, all those people you watch are all going to lose against the S&P. As Scott Minerd said before he passed away, he wanted to be remembered for avoiding all of the crashes, not for being the greatest stock picker in the world, because this is how you wipe out lifetime gains in a single trading year. This number here would bring you down to a 1.5% return roughly over a 20-year period. And you're going to see this number here, I do believe, this year. Again, remember that bottom. When? Fall equinox, late September, early October. Still early on in this, guys. Let's continue. And yes, we're getting the Bitcoin. And we have the VIX, guys. Let's look at the VIX. Very important to track. The VIX is above its 50-day. Getting your chop in here, but more importantly, look at the market makers. Caterpillar, guys. This thing contracts. It's a volatility indicator. When it explodes, you get a big channel. You will see the VIX spike up after that spring equinox, potentially just before. It all depends on that March 14th date. Remember, the spring equinox is your target. The pivot can happen a couple weeks before, a couple weeks after. In the case of .com, it happened on the day of, okay? But it is a cardinal point in the market to remember. So when this channel contracts like that, you get explosions, and this is tightening up, the tightest it has been since we first entered that bear market all the way, guys. I mean, way back here, all the way back in November 21 when you crossed the 50, okay? So that's where we are. It's the tightest it has been, and we're going to see this thing start to explode very soon. Where is this going on the S&P? Geometric trading principles, guys, using my trend-based fib. I've shared this many times. Looking at that target of the 34.28 for the reciprocal move here, and my triangles, and the 1272 at 32.20 being that deeper target, okay? The yellow lines on my screen, you guys have seen me lay these pivots out. We're moving at a 43-day pivot within the Wyckoff accumulation range, and this has marked your tops, your bottoms, your top, and then you sold off and came to another top and sold off, finding support on the 200. March 20th, the green line down here, that's your spring equinox pivot, okay? So this is very, very key. If we hold the 200 or slightly below and bounce back up, potentially making that co-equal high or lower high, look for this quadrant here with the CPI and everything to provide your top, okay? And if that provides your top, just like in .com, then we are selling off. Now, interesting, because of this 43-day, if this continues, this pattern, remember, patterns are dynamic, guys. The market contracts and expands. If this continues, this is saying April 14th is another pivot. So I guess you could say this could play out a couple of ways, right? Let's just say, for instance, the CPI comes in hot. So that's March 14th. CPI comes in hot, you start selling off much quicker. This can very easily be your bottom, okay? This 43 days marks your bottom, and then you just, whatever, come back up to whatever level you're going to come up to. We trade that rally. It's going to be a nice 20-25% rally based on market history, top out, and then come back down. However, if the CPI comes in lower, which, again, the PCE higher than expected, okay? So if the CPI does come in lower than expected, we could see some chop up here after we hit the pivot date, and maybe this April 14th is your top. So guys, understand, we have key movements, key pivots in the market, but it involves you actively paying attention to what's happening. We have outside influences, CPI, Fed, things like that, a conflict in Europe. You have to pay attention to these markets. But what I can tell you with 100% certainty, the spring equinox is going to provide you with a key pivot point. Let's go ahead and move forward. Bitcoin. Bitcoin on the daily chart, guys. Again, I put this in a mini cough structure. This is what I anticipate Bitcoin to do. Here's our pump up, rolled over. We hit our high at 25,180. This is that short that I shared with you guys. I'm out of that short, but I dropped 2,000 points, took profits on that, obviously. And what I think Bitcoin's going to do, guys, is if the S&P holds its support level, I told you this last video, I said, what is Bitcoin going to do? If it continues this trajectory, when the S&P looks to move up, we might get some chop down here in the lower levels. Bitcoin's going to come back up, and if the S&P does not defeat that 4,200 level that it previously hit, look for Bitcoin to hold this 25,180 and do what? Make a double top. You would have a massive double top at this point. If the S&P impulses up a little bit more towards our 4,300, well, then you have those upside Bitcoin targets that you could potentially hit, which would be 26,264. I would believe the absolute top would be 27,821. Bitcoin being a manipulated asset on centralized crypto exchanges, guys. Remember, crypto exchanges can trade against you, okay? But being manipulated, you could see an impulse up to one of these lower levels here to try to wipe out shorts before a dump. But watch this move with the market, okay? So for the guys that keep asking me about the decoupling of crypto to equities, it's not happening in this cycle at all. Bitcoin is tracking to the NASDAQ with the closest correlation, spot 94, in its history, okay? So the markets move down, Bitcoin moves down. If the markets move back up, watch for Bitcoin to potentially make this double top, and we're going to share this trade as well, regardless if it's here to co-equal high or at that higher up target at 27, okay? Let's go ahead and look at Bitcoin here on my chart that wants to load. And here's the pattern I'm looking at, guys. Again, I'm looking at the pattern of descent for Bitcoin. The reciprocal move would have you retesting your lows at 15.5. However, as you guys know, I do believe it's coming down to 12,888, 12,888 time frame. It could lead the markets when they start selling off, so it could bottom first, or it could lag the markets. The markets could pull down, and then Bitcoin pulls down. But I went ahead and put this out there for the April 14th date, just based on the pivot from the SPX, okay? So this is adjustable, but this is the pattern of descent that I believe you're going to have. And guys, you're going to have, you know, retracements, price moves in waves, okay? But this is the pattern. So we'll leave that, and we'll see how that plays out. on the Russell, guys, Russell's 3-day chart. As you guys know, we shorted the Russell above where? Above 1988. We shorted it in our room above 2000. And the Russell has provided an awesome return as well. This is a trade that I am still in. If the S&P holds its support, I'll get out. But this is a 7% move nearly on the Russell, 137 handles. Looking at the Russell, here's our actual trade setup. It was at 1988. See this beautiful double top. And of course, we fell to the 786 at 1879, trying to hold the support level, which I think it probably will. The S&P already hit its 200. The Russell doesn't have to descend to its 200 because the S&P, just like Bitcoin's a driver in the crypto market, the S&P is a $34 trillion market cap. When you add in all of the U.S. equities and the leverage and the various ways you can trade it, derivatives of the equities, people are saying that it is a quadrillion-dollar market. I do believe, and somebody can correct me in the comments, that is 1,000 trillion. Okay, so just understand that. So this is what we're looking at with the equities as a driver, guys. But if the Russell can hold this level, it's just going to come back up with the S&P. Once the S&P decides to move back up, might get some basing down here. Maybe you come down to the 1 fib, complete the reciprocal move, 1855, but it'll come back up and it's going to make a bearish shape and provide us an opportunity as we approach that spring equinox. Again, Russell on the 3-day chart, projected pattern decline, just like with Bitcoin, because the Russell and Bitcoin track super close together. Looking at the 1 fib as a reciprocal, but that's just basically barely beneath your lows. So the 1272 at 1507 is where I believe the Russell is going. And of course, here's your spring equinox pivot, okay? That's where I believe the Russell is going, 1507, after we bounce back up with the SPX and then decline after the spring equinox. Looking at the NASDAQ tracking beautifully to TA, and again, just like with the S&P, looking at the NASDAQ, low volume. You want to see low volume on a down move like this, okay? Because if it has breakout volume or above average volume, that move can be stronger and be longer in duration, okay? So right now, you're below average volume, midday of trading. That's good. We completed our reciprocal move from the double top down to 11,948, and of course kissed the 200. Okay, so we kissed the 200. So this again, we talked about shorting this above 12,718. Yet another fantastic trade, guys. If you go from peak to trough, almost an 8% move. Let's go ahead and check out our silver trade. I shared with you guys as well. 24.41 was my entry, and if you take this decline in silver, you are at a 15.54% decline in silver. Again, remember the mini crash cycle. Check out my 2023 price predictions playlist. But I have silver coming down to 16.46. But silver and gold will probably move back up with the equities when the S&P moves back up, and then look for it to come back down again. But I anticipate this going down to 16, completing this reciprocal move. Same thing in gold, guys. Excellent profits in gold. And if you look at the reciprocal move down at 1576 for gold. I'm telling you guys, the Metal Bulls on Kitco and those channels on YouTube, they have no idea about this crash cycle. When equities pulls down, big banks paper trade. They liquidate their metals when they need liquidity, okay? So you're going to see a mini crash cycle and then a rise in the metals, but we are not there yet. All right, guys, hope you enjoyed this video. Join me for the next video on Sunday. It'll be a combined asset video again. Leave me your comments. I answer them as always. Check out our sponsors, Simple FX, and I'll talk to you guys soon. Have a fantastic weekend, everybody.